Hello and welcome to 3.0 TV. I am Vishakha Thakur and you're watching the Coin Monitor. Bitcoin's recent price dropped below $62,000 on Monday after trustees of the failed crypto exchange Mt. Gox said that the repayments in Bitcoin and Bitcoin Cash will start in July, adding to uncertainty and more selling pressure amid ongoing market volatility and macroeconomic uncertainties. Well, according to the experts, other factors that had a negative impact on markets were uncertainty about Federal Reserve's interest rate policy and technical resistance indications. The market volatility was also influenced by the other reasons such as withdrawals from US-based Bitcoin ETFs and ongoing fears about inflation. IC15 index of cryptocurrencies, the barometer of top 15 tokens, was trading 4.75% down at 77,620 points. But Mt. Gox, one of the world's largest Bitcoin exchange, is set to distribute approximately 142,000 BTC and 143,000 BCH to its creditors. Now, this move, almost a decade after the exchange's collapse in 2014, comes as a double-edged sword for the crypto market. The repayments could create significant selling pressure as recipients might opt to liquidate their assets, especially considering the substantial difference in Bitcoin's value now compared to the 2014 year. And although the phased approach to reimbursements aims to mitigate abrupt market impacts, the fear of a sell-off lingers. Adding to the market jitters are the Federal Reserve's interest rate policies. Speculation about the potential rate hikes due to persistent inflation concerns has traders on edge. As speculative assets like cryptocurrencies are highly sensitive to changes in interest rate expectations, the anticipation of higher rates is contributing to Bitcoin's downward trend. The upcoming decisions by the Fed, especially those influenced by key economic indicators such as the Personal Consumption Expenditure Price Index, are crucial for shaping market sentiment. Another pressure point for Bitcoin has been significant outflows from US spot Bitcoin ETFs amounting to $545 million. This shift indicates a cautious stance from institutional investors who are wary of the market's volatility and regulatory landscape. Notably, Grayscale's GBTC has seen consistent withdrawals, allowing BlackRock's IBIT to surpass it in terms of Bitcoin holdings. This reshuffling of assets underscores the cautious sentiment prevailing among institutional players and highlights their substantial influence on short-term market movements. Despite recent consumer price index data indicating a slight moderation in inflation, concerns remain elevated regarding inflation's impact relative to the Federal Reserve's targets. Persistent high inflation affects market expectations of monetary policy, which in turn impacts the asset valuation, including cryptocurrencies. Well, the complex interplay between inflation trends, central bank actions, and broader economic indicators continues to shape investor sentiment and contributes to Bitcoin's current price volatility. So if you talk about the current price of Bitcoin, Bitcoin was trading at $61,132, down by 5%. And Ethereum at the same time, the second largest crypto, was down by 5%, trading at $3,310. We're talking about Binance's BNB token. It was down by 3% to trade at $569, whereas Cardano's ADA token was down by 4% to trade at $0.39. Simultaneously, Avalanche's AVAX was trading at $24, lower by 3%, and Polygon Matic was trading up by 5% to trade at $0.55. Doge, the popular meme coin, was trading down by 5% at $0.11, whereas Shiba Inu was trading down by 6%. At the same time, Ripple's XRP token traded at $0.45, down by 2%. Furthermore, Solana Sol was down 5% and was trading at $127, and while Polkadot was down by 2% to trade at $5.9. So that's all in the Coin Monitor. This is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.3versetv.io or scan the QR code. With 3.0 TV, stay connected with the world of blockchain. Stay up to date with infinite world of NFTs. Come explore and evolve with 3.0 TV in the Metaverse.
So many coins, so much volatility. 3.0 TV delivers the news that matters.
Consensus, a prominent Ethereum software company, is continuing its legal battle against the US SEC for crypto clarity. Now, despite the conclusion of Ethereum 2.0 investigation, the SEC failed to provide a definitive regulatory clarity regarding Ethereum's classification. Consensus head of litigation, Laura Brookover, emphasized that the company is committed to advocating for clearer rules governing digital assets. The SEC has previously issued a Wells notice signaling its intention to take enforcement action on these matters. Consensus submitted a letter questioning how the recent SEC approval of spot Ethereum ETFs impacts the ongoing investigation, stating that these ETFs were approved under the premise of Ether being treated as a commodity. The SEC's Ethereum 2.0 investigation has sparked debates over Ether's security classification and its implications for other cryptocurrencies. The United Arab Emirates is considering aligning with the US for technical and policy direction in its AI ecosystem, aiming to capitalize on North America's AI successes. The UAE's Minister of State for AI, Omar Al-Olama, stated that the country needs to be selective in its AI collaboration, stating that discussions between the UAE and the US will focus on what they are comfortable with and what they are not comfortable with. The plans to work with the US for infrastructure support follow extensive talks between both countries involving key sector players. Microsoft injected $1.5 billion into G42, a UAE-based tech firm, in a deal that saw the CEO take up a seat on G42's board. The deal also saw G42 ditch UI system in favor of Microsoft Azure platform, with the US demanding loyalty from its partners amid a brewing Cold War with China. Foundry Digital LLC has launched Foundry Hardware, a suite of specialized equipment designed to improve institutional Bitcoin mining operations. The suite includes power supply units, immersion optimization kits, and control boards for various mining machine models. Well, these products are engineered to streamline maintenance and adapt to diverse operational demands, allowing miners to optimize their setups without extensive modification costs. And Foundry's decision to enter the hardware market was driven by the desire to provide innovative products and along with that aimed at making miners' lives easier through simpler maintenance while continuing to focus on improving mining efficiency and uptime reliability. Foundry USA currently leads as the largest Bitcoin mining pool, controlling to 27.19% of global hash rate.